All right. Hi, everybody. Welcome to today's webinar, Gold and Silver 101. For those of you that hung in there with us, we did have some technical difficulties getting the stream going, so we're starting about 20 minutes late here. Sincere apologies on that, but we're here to deliver some really good content today, and I do appreciate you hanging in. And for those that missed it, I'm sure there's going to be a replay that we send out. But you guys, thank you for being here today. I'm Machi Block with American Hartford Gold. I'm a senior director here, the nation's largest precious metals dealer, with trusted by countless Americans to protect their retirement savings with physical, tangible gold and silver. And I want to just kind of give everybody a chance to settle in here, get this stream going. And while we're doing that, as you get settled, write us a comment. Let me know where you're watching from. It's always great to know who's joining us. I'd love to hear whether you've bought gold and silver before or whether this is your first time. And then also let me know what brings you to today's webinar. Is there something that you're seeing in the economy that has you looking at precious metals? Or is there something specifically that you're joining us for today, hoping to learn on this webinar as well? So if you just want to take a minute, write in the chat, let me know who you are, where you're watching from. That would be great. Now, again, I'm Machi Block, Senior Director at American Hartford Gold, and today I'm really excited to take you through the essentials of owning physical precious metals and why they're a cornerstone of a strong financial strategy. Now, look, it's no doubt that the economic uncertainty right now is on the rise. We've got market volatility, global instability, looming recession, and of course, a declining dollar. And in our opinion, it's more important than ever before to understand how gold and silver can serve as your financial safety net. Now, whether you're a seasoned investor or you're really just beginning your journey into precious metals, our goal today is to provide you with clear, actionable insight on how to secure your hard-earned savings with the time-tested value of gold and silver. So we're going to discuss how precious metals fits into a well-rounded retirement portfolio, of course, the latest news impacting their value in the markets, and how American Hartford Gold can help you get started easily and confidently. Now, if you stick with me until the end, I'm also going to share how you can qualify for up to $15,000 of free silver with your first order. That's really our way of saying thank you for taking the step towards securing your financial future. So we're getting started. People have obviously filtered in here, guys. Look, we're just wrapping up the first quarter of 2025. Now, keep in mind, with all of the volatility that we have been seeing, the ups and the downs, the stock market really is flat so far this year. And I know that that sounds very odd to hear with the ups and downs that we've seen. But if you remember 2008 during the financial crisis, we had a very similar situation and setup at that time, only then we really didn't have the massive amounts of government debt that we have today. We're currently running the largest deficit in history. We have no plans to stop the printing. Our debt is about to surpass $38 trillion, and U.S. consumer is racking up debt and quickly running out of their savings. And we were already heading into a recession before the tariffs hit. But with some slight positioning figured out on the trade war, and of course, some of the tariffs getting worked out, we're still tariffing half the world, and there's still very, very many unknowns up ahead. So my biggest concern right now, and what we're going to address this year, we have $9.3 trillion of government debt that's coming due to be refinanced at a much higher interest rate, about double the rates that we currently have. Now, if we don't get rates down, which is, of course, what Trump and Powell are fighting over right now, then we're really going to have a debt bomb that could create a dollar crisis. On top of that, we have $2 trillion of bad real estate loans that are coming due in the banking sector this year. The banks can't refinance that debt at higher rates either. And all of this is creating the perfect storm of which there really seems to be no escaping. And that's why last year we had Jamie Dimon, the CEO of JP Morgan Chase, said equivocally, there's a financial hurricane headed for our shores. We as a bank are bracing for this. It's time that the U.S. investor does the same thing. Now, in the 2008-2009, the housing market is what crashed the market. And in 2025, we may have the commercial real estate bubble or the government debt bubble be the catalyst that really sends us into a tailspin here. So, that's what we're wary of. Now, of course, we've seen tremendous market volatility so far this year. We've got trade wars that are disrupting supply chains, a tariff guessing game from the White House, and it's been anything exciting and terrifying for many investors while most of us watched our portfolios plummet day after day, riding that emotional roller coaster up and down, mostly down to the tune of about a negative 20 to 25% drop in stocks so far. And now it appears that we're getting a little bit of a relief in the markets. But the big question is this the end of that uncertainty? Is the market done dropping, or are investments safe and secure at this stage of the game? And that's really the answer we all want to know right now. And I've got to tell you, I wish my crystal ball was working, but I'm really not going to be able to predict the future for us beyond what history has shown us to expect in these scenarios. And whether stocks go up or down, the real concern is not what stocks are going to be doing. And although that's very in your face, it can be a real wake up call for us. In truth, what really matters is not what stocks do, but what they're valued in and how that performs. And of course, I'm referring to the US dollar, which is facing an existential crisis right now and continuing to lose value. If the dollar is going down, we need a hedge, regardless of what any other market is doing. Ray Dalio, billionaire hedge fund manager, says that everyone is so concerned about how their investments are performing, but they really give almost no thought to what their investments are actually priced in. And that's where the real danger lies. So again, while I can't tell you the future, and this is important, it's in times of uncertainty and economic volatility that investors like you and I really begin to wake up to the madness, and we start to look for a more comfortable place to park our life savings and ride out this storm. And that's what we're here to talk about today, is regardless of what Trump does in the White House, regardless of how the trade war plays out, regardless of peace or hostility in the Middle East and Europe, we do have a way to kind of step off to the sidelines and get into a traditionally conservative investment that does incredibly well in times of volatility and uncertainty, and actually has the backing and encouragement of many, if not most, of the major financial institutions, the economists, the analysts, and of course, legendary investors right now. And that seems to be the one last place we can really look for a safety net with the current state of things. And again, of course, I'm talking about owning physical, tangible gold and silver as a way to hedge against the concerns that we all seem to have in the economy and the markets right now. So we're going to talk about a few key issues that we're all noticing, how they impact precious metals, how gold and silver respond, and of course, how you as an investor can protect your portfolios with precious metals. And there's two main areas to focus on, right? We have market issues and we have dollar issues. Market issues are things like stock market volatility, trade war and tariffs, global and geopolitical instability and recession. And then dollar issues are things like inflation, the de-dollarization that's taking place across the globe right now, and government debt. So we'll get into all that at any point in time in this webinar. If you want to chat directly with our team, we do have account executives on standby. You can call the number on the screen, which is 866-607-2447. And you can have a more in-depth and specific conversation with our account executives that can get right into the heart of what concerns you and your scenario. Also, leave your questions in the message board. I do have moderators here that are helping to send me some of those questions periodically as we go through this. And if you have a really specific question, one of our moderators may pull you into a side chat to really answer that one-on-one with you. So keep that in mind as well. Anything that you write is helpful for us as we go through these webinars. It gives us a sense of what's important to you so we can tailor these in the future. So even if you think I'm going to address that question, just leave it in the chat bar for us. That's a really good thing that gets us to go forward in the future here. Also, very important to note that this is not financial advice. I'm here to give you a good sense of what we're seeing in the economy and the markets and help point you in the right direction. Ultimately, you have to take charge of your own financial situation. We're here to be your ally in that journey. So we'll get into it here. The first thing I really want to talk about is the stock market, right? We've seen this incredible volatility, more than most of us can remember in any recent history, ups and downs, primarily seeing the market drop over about 20% and getting into bear market territory. Now, right now, as of this week, we're getting this nice relief. We're getting that bounce. And we don't know if the trend is up or down. It sure seems like it's down. But what happens is we find ourselves on this very emotional roller coaster. And most of us don't want to have our life savings tied up in a circus ride, right? We're trying to find stability. We're trying to find confidence when all of the uncertainty out there in the markets is telling us that this is not the place to be. Investors tend to make very emotional decisions. And the minute that that pain is gone, so is our urgency to make any kind of decision and get ourselves off the sideline. But what I really want to impress upon you is that in the midst of that, our portfolios are stagnating out and they're kind of being chipped away at. And so what we really want to look at is the fact that this is the largest bubble in American history. This is the most overvalued S&P 500 that we've seen since 1929. And those fundamentals don't just change overnight with a little bit of a bounce in the market. If you look at Warren Buffett, he's still selling. He's sitting on over $1/3 $1 trillion of cash in his portfolio right now and continuing to sell in this environment. That really should tell us a lot about the state of things here. In 2008, 2009, during that great financial crisis, it took 19 months for the market to go from its top all the way to its bottom. And we had plenty of relief rallies along the way that gave investors this false hope on the way down. Many economists are still warning that this is just the catalyst that's popping the bubble. It's not the bubble popping just yet. That real crash is still up ahead. And what I would tell you is that a very good litmus test is if you felt pain while the market was dropping and you wish that you would have positioned yourself differently, or you wish that you would have acted quicker, this rally that's kind of brought us back to even is a good time to pay attention to your gut and act. There's a great saying, right? Pigs get fat, but hogs get slaughtered. And what I mean by that is don't give in to greed, hoping to squeeze every single last dollar out of the market. If you get a chance to kind of get back to even or near even, and your gut was telling that you wish you would have made a move or diversified a little bit differently, if we go into a very similar scenario that we just went through, don't relive that twice. And remember that right now, you're just even on the year. The stock market's actually down about 1%. So you get this sentiment of seeing the market go back up, but is it really going to give us the returns that we're looking for? Investor sentiment overall in US assets, both stocks and treasuries, has been waning and faltering. And we saw this rush to the exit with foreign investors. It's going to take a lot of certainty to bring that money back into the markets. Meanwhile, gold is up over 30% this year, and it has all of the wind at its back. And so given the two markets, take your pick, right? And that's really what we're going to explore. Now, we also have the trade war and the tariffs. We've tariffed the entire world at this point. And whether you think we needed to as the US or you think that's reckless, we're not resolved yet, right? There's been very little that's actually been brought to the table. We're still having several starts and stops and pauses with very little figured out at this stage of the game. We're at the table talking, and while we are, there's very, very uncertain terms on the table. Markets hate uncertainty. On the inverse side, gold and silver love uncertainty, right? That's where they thrive, and that's why we see gold and silver doing as good of a job as they're doing right now so far this year. And the stock market seems to be cheering on this US-China trade deal with the pause for 90 days, but the tariff damage really has already been done, and investors, policymakers, and consumers have yet to fully reckon with the consequences of Trump's actions so far. There's this really great quote out of China. It says that once you're riding a tiger, it's very difficult to get off. And Trump's trade war has already done lasting harm to the global supply chains. We're in the midst of this mess, and we have yet to fully realize the effects of it. And I want to read you a quick quote from Market Watch that I think sums this up very nicely. It says, unpredictability may have worked for Trump in his personal business dealings, but when applied to global commerce, it generates tremendous chaos. As supply chains thrive on transparency and certainty, not bluffs and sudden policy reversals, which is what we're seeing. The disruption unleashed by Trump's tariffs will not stop at the stock market. It will reverberate throughout factories, ports, and storefronts worldwide. Now, Paul Tudor Jones, legendary investor, billionaire, says the stock market will hit new lows even if Trump's tariff cuts happen with China. So he says, for me, it's pretty clear. You have Trump, who's locked in on tariffs. You have the Fed, who's locked in on not cutting rates right now. That's not good for the stock market. We'll probably go down to new lows even when Trump cuts the tariffs on China. And so that was said a couple of weeks ago. Now we're at that stage where we're potentially cutting those tariffs. Is the market going to continue to drop here? There's also geopolitical uncertainty across the globe right now. We have wars, and rumors of wars, right? There's India, Pakistan. This is new. We have Russia and Ukraine, which is dragging on. There's Iran tensions that are mounting, Israel and Palestine, and the list just goes on and on right now. Traditional markets, again, don't love that uncertainty or the chaos. Meanwhile, gold and silver thrive in times of uncertainty and instability, and that's why we're getting this run up on gold. We also have this recession that's still on the table, right? The talk of the day right now is stagflation. It's not that we're out of the woods yet, and again, a temporary relief in conditions can give people certainty and think that all is rosy and the sun's shining again, but the reality of it is we're still headed for a slowing economy. And the tariffs and the trade wars have really disrupted supply chains, have disrupted the goods that are being imported into the country, and that will take a huge toll on the economy as a whole. It takes months and years to resolve trade imbalances, supply chain issues, and debt, and all of these things have been exacerbated in the last 3 or 4 months here. The first ships have been arriving to the ports in Los Angeles, and they're half full. And so again, what consequences is that going to have on the greater economy as we go forward here? Billionaire Steve Forbes says as gold soars, the US is headed towards a 1970s style inflation nightmare. Apollo says the US will absolutely have a recession in 2025 if the tariffs stay high. And Bloomberg says central banks will keep buying gold in these conditions. And of course, that's exactly what we see. Right, the next thing to pivot to here is the dollar is down 8% so far this year. There's a major weakening in sentiment on the US stock market, as evidenced by both stocks and the bond market crashing as well. Central banks have been dumping US treasuries to buy gold for over 3 years, and they're escalating that purchasing this year. And there's a reason for that. This is pushing gold to record highs, but it's really just the start. The BRICS nations, so Brazil, Russia, India, China, South Africa, 50 of the world's largest emerging economies, all banded together, leading this charge against the Western world. And they're really starting to create this uncertainty and instability around the dollar. We're really not the reliable system here in the US that we once were, not just for the fact of tariffs and the posturing that's happening right now, but for the fact that we have 37, almost $38 trillion of government debt that's been racked up. We're basically insolvent at this point. And of course, Trump wants the Fed to cut rates. The reason for that is we have this $9 trillion just this year coming due that has to get refinanced. The rates right now, if we were to refinance, are going to be double what they're currently at. And so if we don't get the rates down, what does that do to the US system to have to refinance that debt significantly higher? The problem there is cutting rates creates a weaker dollar, which exacerbates the system even further. And Trump does want a weak dollar, right? He's trying to create this manufacturing nation where we're going to be producing and exporting. And a weak dollar is very, very good for that scenario. In fact, we need it if we're going to be exporting. But again, what happens when the dollar weakens? Inflation goes back up. Of course, it stimulates GDP, so there's a positive side of that. But the value of our currency is going down. So what you and I hold on to becomes worth less and less and less when priced in the dollar. Meanwhile, of course, gold grows against a weak dollar, right? And again, I just want to bring you back to that Ray Dalio quote where he says, pay attention to what your investments are based in and the direction that's headed. And all of the alarm bells are ringing right now on the state of the dollar and the future of what we're headed into. So while the tariff trade war with China looks promising, in the meantime, they're committing hundreds of billions of dollars of infrastructure to Latin America to create a more democratic, multipolar international order. Right? They're clearly committed to challenging the US system no matter what gets worked out on the trade deal. So just because we can get them to the talking table and maybe come to some agreements on what it looks like between us, their overall goal is to pull dominance away from the US, away from the dollar, and away from that Western hegemony that's been created over the last few decades here. And if you think the current situation is bad right now, just wait until the White House can't find anyone to buy its debt. that's where we have a real crisis on our hands. And we did see that with this dramatic dumping and crashing of the US bond market as foreign investors really started to pull back from the US dollar and say that with all this uncertainty on the table, that is not the place that we want our investments to stay. So is there more of that ahead? I'd say the answer is yes. We're not out of the woods yet. So remember, guys, gold goes up against the dollars. The dollar loses value, gold goes up, and we're continuing to see the dollar erode here. Again, down 8% so far this year. You remember 2008, 2009, the dollar index dropped 30%. So if we see any kind of moves like that, what does gold do? As our government debt continues to climb, gold will only become more valuable and more crucial to have in your portfolio as a hedge. And so I would just encourage you, appreciate you staying with me here, but also if you want to get into this right away with our account executives, call us on that number, 866-607-2447. And of course, we can discuss your situation in more detail and really get into the ins and outs of what's going to be best for your situation. So with all of this going on that we're kind of covering here, of course, gold is growing. And before I get into the projections of where gold is headed, I do want to take just a minute here to answer some questions that have been coming through and address some of what you guys are putting on the table here. A couple of things to rattle through. So is it too late to buy gold with it at the all-time highs? So I'm glad you asked that, David. The reality of it is gold is at all-time highs. It's starting to grow, but when you price it for the amount of money that we've printed over the last 5 years, it's not really at its adjusted high, right? So that should tell us that there's a lot more upside to gold and where we're headed. And you have seen, and I'll touch on this, in prior bull runs for gold, there's been years where gold has done 130%. We're up about 30% so far this year. And so with all of the conditions that are pushing gold forward, this is really just the first or second inning out of a 9-inning game. You won't really find a single voice out there that's saying gold isn't going much, much higher. So don't let the fact that gold is at an all-time high scare you into thinking that it's too late. And you know what? If you are a little uncomfortable with that, silver has not run yet. There's an incredible investing opportunity into silver right now. Is it safe to trade online with your company? Look, you're not trading online. We don't have an online website for you to buy or put your credit card information in. We're the nation's largest precious metals dealer. We've shipped billions of dollars worth of gold and silver around the country just in the last handful of years alone. Everything that we do on our side here is meant to make this as simple and as easy as possible for you to get into the dollar or into gold and silver out of the dollar. And then, of course, if you ever want to get back into cash, we'll be here to buy it back from you as well. So it's a very safe, tried and true process. We have hundreds of thousands of clients that we worked with that are just like you. And that's a great question. You really want to get on with one of our account executives and flush out those concerns. What does the process look like to buy with American Hartford? What does it look like if I want to get back into cash? How do you guys ship the gold to me? And we're going to talk about all that as well. How long does it take to get gold with my IRA? This really depends on how the account is set up. Typically, it's going to take us about 5 to 7 days start to finish to get your account set up with a new self-directed IRA. We roll funds out of your current account, move them into this new self-directed IRA, and then we purchase precious metals for you. Usually takes about 5 to 7 business days, just kind of depending on the custodians. And we'll do everything we can to rush that process along. And again, make it very smooth, very simple. We will do all the heavy lifting for you in that process. So you can kind of sit back and just know that you're getting yourself taken care of here. Okay, I'm going to wait for some more questions to come in here. Let's go ahead and go forward on the last couple of points here. So let's talk about gold. Where is it? Where's it been going? Where's it expected to go as we go forward in this year? The gold rally this year should really give you the confidence that you're looking for and that you're looking in the right direction when you look to precious metals, right? In just 2 weeks alone, we saw gold jump from $29.50 an ounce to over $3,400 an ounce. That's a good reminder that when the global uncertainty strikes, gold remains that ultimate safe haven, right? And there's plenty more of that to come up ahead. When traditional markets are choppy, investors tend to move into gold. And we see that not only on the retail side right now, but also the institutional side as well. There's this big money that's moving, that's leaving the traditional system, and it's moving into gold right now. In fact, we see record inflows into gold just this year alone. Gold is growing. It's hit new all-time highs this year. But again, we're still very early in the game. Since 2000, if you look at it, gold has outperformed the stock market. It's grown about 1,050% for gold. Silver has done about 428%. You compare that to the S&P 500, it's only done 244%. Just since the start of this year, gold is up about 37%, silver's up 14%, and the S&P 500 is about negative 1% so far. And if you look at the decade so far, gold has returned about 113% compared to the S&P 500's 78%, which includes that dividend reinvestment. So gold is doing an incredible job, not just here in this year, not just over the last couple of years as we've seen this volatility, but as you zoom out, gold has this track record of outperforming the stock market. And we get so caught up in what the market's doing and thinking that that's where we want to have all of our money. Meanwhile, gold is just quietly growing, quietly doing its job, and it's doing that very consistently, very steadily, and very stable. More Americans than ever before are moving into precious metals and starting to buy. And it's not just retail investors. Again, Bridgewater, which is Bridgewater Associates, the largest hedge fund in the world, started by Ray Dalio. They just committed $318 million to a gold position this week. So they're betting on much, much further upside on gold. Again, you're still very early. Your timing and your intuition really couldn't be more spot on right now. And remember that one of the big drivers on gold is central banks, right? They're buying record amounts of gold right now. They're doing that to prepare for a world where the US dollar is no longer the world's premier currency. And so if we see the world walking away from the dollar, do we have confidence that the dollar is going to stay strong and stay afloat? And if the answer is no, that we do see that eroding, gold will continue to grow against that failing dollar. And that's what I really want to impress upon you while you're watching here. Stock market, yes, that can create volatility and push money into gold. Global uncertainty, that can push money into gold. All these things create cycles, but overall gold will grow against a failing dollar. And I don't think, again, you'll find a single voice out there that has hope that the dollar can really rebound from $38 trillion of government debt and a consistent erosion as geopolitics pull away from the US dollar. So if that's happening, gold will continue to grow against that. So I want to give you that confidence here. Now, look at the major banks. UBS, JP Morgan Chase, Goldman Sachs, just over the last 2 weeks, have raised their price projections on gold to about $4,500 an ounce or $4,700 an ounce by the end of the year if things continue on the trajectory that they are. JP Morgan Chase said they see gold at $6,000 an ounce, even if a minuscule shift away from US assets happens from foreign investors. If just 0.5% of US assets that are held by foreign investors move into gold away from the US dollar, we could see gold at $6,000 an ounce by 2029. So that's a tiny amount of movement of money, very believable that could happen. And of course, as we go forward into more uncertainty, we're seeing just that, which is starting this run in gold. That recent volatility that we've seen has shown us that the US is very vulnerable to capital outflows. And I would almost guarantee that that's going to continue to happen as we go forward on this year, because again, as long as there's uncertainty, money is going to be moving around, and a lot of it is moving away from the US dollar, and it's moving into gold as that safe haven investment. I want to give you the confidence again. CNBC says, buy the dip in gold. This is a major headline. Morgan Stanley, UBS, and Deutsche Bank turn bullish on the shiny metal. Right? So these are the major investment banks, the institutions that are leading economics, that are driving those global markets, and they're saying turn to gold. Why are all of these banks projecting gold to go so high right now? What are they seeing behind the scenes that's causing them to have that confidence in precious metals? Right? And it's not just gold. Silver right now is incredibly undervalued. Anytime we get a bull run in gold, you're going to get silver to move along with it. And silver right now has been lagging behind gold, which is very common. It's exactly what we would expect. That ratio between gold and silver in a natural setting is typically 16 to 1. So 16 ounces of silver should equal 1 ounce of gold. We're stretched to about 100 to 1 right now. Silver has only been this cheap compared to gold 2 times in its history, and both of those times were the last 2 bull runs in gold, where silver broke $55 an ounce each time. And so analysts are saying that silver is expected to run to its highest price on record. And you look at the industrial demand. So gold primarily is a financial asset, right? There's a little bit of industrial use on it, but silver has 2 facets. One is financial and one is industrial. And just on the industrial side alone, we're using about 250 million more ounces per year than what we're pulling out of the ground. And so there's this major deficit that's happening on the silver side that is expected to drive silver to incredible heights, where many economists are actually calling silver one of the best investments you can make over the next decade just because of that supply and demand deficit. And keep in mind, that doesn't take into account the demand that's on the financial side, which is only increasing. Central banks are starting to stockpile silver, and they're looking at it as such a strategic commodity that they're beginning to kind of look at that and lean on it just like they are with gold. So there's a bright future ahead for both gold and silver, but tremendous upside potential for silver right now. And now as I get into it, I'm going to talk about how you can invest into precious metals with American Hartford. All the details that you guys are really looking for here. It's a very, very simple, straightforward process to invest with us. So there's 2 ways that we help our clients. One is through cash investing, and the other is through retirement accounts. With cash, it's very straightforward. It's just a wire transfer or a check over to American Hartford Gold. We'd sit down, we'd build out a 7-digit client ID with you. You'd wire the funds into our company. We would go through a full consultation, help you select the metals that you want, build out a portfolio that's right for your situation. And then we ship that gold and silver right to your door. It's fully insured. We cover the shipping cost. There's no sales tax. Again, we've shipped billions of dollars worth of gold and silver around the country this way. So it's a very tried and true, safe process to do so. At any point in time, you want to get back into cash, we do have a 2-way marketplace. We'll buy back with 0 fees on our side. It's as simple as calling us up, letting us know that you want to liquidate. We'll put together a ticket for you, send FedEx to your home with packing material and shipping labels. You'll send the metals back to us, and we'll wire funds into your account. So there's this very, very straightforward 2-way marketplace on the cash side, and there's no limit to the amount of gold that you can have on hand. So again, it's a great time to be getting out of the dollar into real tangible wealth that's found in precious metals. The other way that we help our clients is retirement accounts. So a lot of our clients have the majority of their net worth tied up in old 401ks, IRAs, retirement accounts that they're concerned about protecting. Again, they're experiencing that roller coaster up and down in the markets, as I imagine you are as well. And they're looking for ways to diversify out of traditional investments, getting some funds off the sidelines so that not everything you've worked your entire life to build up is exposed to this volatile system right now. And you can put physical, tangible gold and silver into a retirement account. Now, the way that that works is we open up what's called a self-directed IRA. So again, that's just a quick application on our side for an account that allows you to hold on to physical, tangible assets rather than stocks, bonds, equities, and the dollar. We do that with you on the phone, get some information from you, send out this application via email. You'll do a DocuSign, and then our back office will do a custodial call. We'll call over to your current custodian, help you liquidate whatever funds you want to protect into precious metals. We'll get the transfer form set up, and we'll keep our thumb on the process the entire time until the account funds. Usually it takes about 5 to 7 business days, again, from start to finish, and we'll do everything with the detail work to make sure that it's a very smooth process. When the account does fund, we'll do a full consultation with you. You'll speak to one of our directors. They'll get to know your investment objectives, your time horizon, and they'll build out a well-diversified portfolio for your needs. And then we ship that gold and silver to a private depository. This is a third-party vault. It's outside of the banking system. So it gives you that safety and security. It's $225 a year in most cases to store your precious metals. That's a flat fee for custodian and storage fees combined. And American Hartford Gold will always cover the first year of storage and custodial fees for you. So getting the account set up is free, and it's tax-free, and it's penalty-free. So we'll help you make that a very smooth process. And then you can own physical, tangible gold and silver inside of your retirement account that is stored for you and fully insured. At any point in time, if you want to take possession of those metals as a distribution on the account, you can do so. And we'll talk to you about all those details. So I'm kind of brushing through this. I'm giving you the overview. If you want to get into the more of the details on that, again, call us right now. Talk to one of our account executives. That number is 866-607-2447. Now, we've talked about both ways that you can invest into gold and silver. But why American Hartford Gold? What sets us apart? What makes us different? Look, again, we're the largest precious metals dealer in the nation. We've shipped more gold and silver than any other company out there, over $3.5 billion shipped and delivered to satisfied clients. We've got an A+ rating with the Better Business Bureau, thousands of positive reviews online. And really, when it comes to our company, we want to ensure that you're going to have a great experience from start to finish. We're very detail-oriented, fully transparent. We want to take you from the beginning, holding your hand all the way through until you own gold and silver. And of course, if you want to get back out of gold and silver, we do have that two-way marketplace with zero fees. We realize that getting into gold and silver is a new investment for many of our clients. And it's really important to us that we do get you educated. I don't expect you to become a precious metals expert going through the process, but we do want to give you a good lay of the land and give you education that gives you confidence so that you can sleep easily at night. And if you look, our president, our CEO, they're all over Fox and Newsmax, Forbes, giving interviews, writing articles, really leading the industry forward in transparency and education and compliance. These are major things that you're not going to find with any other company out there. So you want to have the confidence in our firm. You want to make the move with the name brand in gold and silver. And of course, unequivocally, that is American Hartford Gold. Now, we did talk about the free silver that comes with your first purchase. And I want to touch on that briefly here. When you're making a move into precious metals with American Hartford for qualifying investments, we have a promotion where we're going to match you 1% of your order in free silver back for every $50,000 investment that you make. So if you hit $50,000, we're going to give you $500 of free silver that we ship right out to your home. That doesn't matter if it's IRA or cash. And as you go forward in those increments, so $100,000 would give you $1,000 of free silver all the way up to $15,000. Now that is on your first qualifying investment. And if you want to get into the details of what that looks like, again, give one of our account executives a call right now. They'll talk to you about that promotion, make sure that you do qualify. And we want to make sure that you can get in while that promotion is running and earn that free silver on your investment. It's nice to take advantage of the perks. Again, we will cover the account setup and the first year of storage as well for your IRAs. So if you want to take advantage of that, that promotion is running now. Give us a call, 866-607-2447. Now, with all of this going on in the markets, with all of the volatility that we're seeing, of course, many of us are sitting there scratching our heads wondering, where's it going to go? Do I really need to make a move? Is it over? Is it getting better? Is Trump really going to take this nation back into a manufacturing nation? And is that settled on the world stage right now that I can just feel comfortable with how I'm positioned and ride this out? But I would just say that I can promise you there's always going to be uncertainties on the table. Just without a doubt, we're walking into a very uncertain time. Again, the stock market is the most overvalued we've seen since 1929. What comes along with that? We're seeing this eroding of the US dollar where the world is pulling away from it. It's not just that we're weakening the dollar here at home with money printing and government debt. And of course, that's a huge issue. But ever since we sanctioned Russia at the start of the Russia-Ukraine war, the world took note. They're pulling away from the dollar, saying that's not really where we want to have all of our assets tied up because there's just too much unpredictability there. You know, we don't know what the world's going to look like. And so they're moving out of the dollar and hedging into precious metals. That's happening on the central bank side. It's happening on the government side. It's happening on the institution side. So money is moving. But not just that, you have China and Brazil, Russia, India, South Africa, these major emerging nations that are challenging Western dominance, that are saying we don't want to be subjected to the US dollar anymore. We're kicking it out of our cross-border payments, and we're going to rely on something different. And what they're doing is they're buying gold to shore up that new system, that new economy. They're creating this very multipolar world where it's not just the dollar in charge. So as we go into the future, things are bound to change. And of course, if you look at the state of the dollar, it's always been going down since we came off the gold standard in 1971. Fiat currencies always go to zero. It's just a matter of time. And so if you don't feel comfortable with where the dollar is headed, if you know that we're losing value, we keep printing money, that government debt is a major concern, where would you rather be, the dollar and dollar-based assets or physical, tangible gold and silver that's been around for 6,500 years of recorded history? There's a lot of confidence, a lot of peaceful night's sleep by owning real, tangible gold and silver that is wealth and has been wealth through all civilizations, all governments, all economic cycles. And of course, we see those fundamentals playing out before us today. So if you're really concerned about the markets, the dollar, the uncertainty, and you know that there's something in your gut telling you it's time to make a move, there's never been a better time than right now to get a hedge. And we can talk strategy with you on what that looks like for your scenario, how much to move, how much to get a hedge with. But the important thing is just get started, because we all know that we can put good intentions on the back burner and never get to them. And then we find ourselves in another recession, another 2008, 2009, never having made the move that we had the good sense to think about and take those steps to start. So open up an account, jump on with one of our directors, our account executives. They'll talk to you about what strategy it looks like for your scenario to move forward, to get that hedge, to get some risk off the table, and owning some amount of precious metals to hedge against what you're currently positioned in. Look, the market goes up, it goes down, it could get much worse, it could get better, it could settle out. But gold is going up, it's far outperforming the stock market, it's far outperforming all traditional markets, and there's a reason for that. And so why wouldn't you want a hedge? And remember that we typically make decisions based on emotions. And so when the market's dropping, we have these good intentions to make a move. And the minute the market turns around and we get a green day, we sit back and we think, we're good, it's fine. And then the next red day comes, and then the next red day, and then the next red day. And we slowly watch our portfolios chip apart. And that's why Goldman Sachs has warned of a lost decade in the stock market. They said for the next 10 years, after the market drops dramatically, the market is expected to return 1% to 3% per year for the next 10 years. So imagine the volatility in that scenario. And maybe it's time to take what you've worked your entire life to build up and just hedge a portion of it into the other side of the market, which again is doing incredibly well. Even if the stock market's doing great, gold has been doing better, silver has been doing better, and that trend is expected to continue. Why are these banks saying that gold should go to $6,000 an ounce? Why are they saying it's going to hit $4,000, $4,500 an ounce this year? Those conditions are on the table. Those projections from the banks are coming out of knowledge and experience and analyzing the markets behind the scenes. You know, these are the most prestigious investment banks in the world: UBS, JP Morgan Chase, Goldman Sachs, Citigroup. They're paid to be right, and they're staking their reputation on these claims of where gold is expected to go. So you can take that to the bank. You can lean on that and say, I know that that market is looking to do very well. On the other side, there's so much uncertainty. Let's make a move. Let's get something protected. And that's what our job here at American Hartford Gold is to make that process very seamless, very painless, and very thorough for you to get educated and comfortable in that process. So again, guys, I want to thank you for joining us. I'm Machi Block with American Hartford Gold. Give us a call, that number on the screen, and jump on with one of our account executives, and we'll talk about how taking these steps can put you in the right place to give you the peace of mind that you're looking for. And I want to thank you for joining us. We will do these webinars consistently to give you market updates as we go forward, because this is a very changing, very dramatic environment. But for now, you have a decision to make. And I would say that the fact that you're joining us here today should tell you everything you need to know. Jump on the line with one of our account executives, and let's figure out how to make those next moves.